Strategy flexibility. In a fast-moving market, rigid strategies can be dangerous. Flexibility doesn't mean abandoning your trading plan at the first sign of trouble. It means being prepared to adapt when conditions clearly warrant it. Start with diversification. Don't put all your capital into one trade or one market. Spreading your investments across asset classes helps reduce risk and protect your portfolio during unexpected downturns. Stop-loss orders are another essential part of a flexible strategy. They limit your losses when trades move against you, allowing you to exit automatically without letting emotions take control. It's also crucial to review your strategy regularly. The market may evolve, and what worked in a low-volatility environment might fail in a high-volatility one. Ask yourself, are your indicators still effective? Is your risk-to-reward ratio still valid? Be willing to test and refine. The best traders aren't the ones with the flashiest systems, they're the ones who can adjust to change while maintaining discipline. Your edge comes from your ability to learn, adapt, and improve continuously. You can learn more by clicking the link in description.